Welcome to The Explainer. All right, let's talk about something that's both super exciting and, frankly, a little terrifying. South Korea's AI chip stocks. We're going to dive right into this high-stakes world and figure out how a U.S. investor can even begin to navigate it.
Okay, just picture this. You've got one of the most important AI companies in the entire world. I mean, they make the memory chips that power literally everything. And then, boom, it loses over a tenth of its value in one single day.
Well, that's exactly what happened to skhynix on what we're calling Black Tuesday, March 3rd, 2026. And look, this was no random market wobble. This was a total perfect storm of bad news. So let's break down exactly what went wrong.
So what happened? It kicked off with a major geopolitical flare-up, right? That sent oil prices through the roof. And for a country like South Korea that imports most of its energy, well, that's a huge problem. But then you pile on some really bad company-specific news. Samsung announces a big delay at its Texas plant. What's the result? A total panic. Foreign investors just dumped everything and ran for the door. But here's the thing, and this is so important to get. Even with that gut punch of a drop, the stuff these companies make, it's more essential than ever. They are, without a doubt, the backbone of this whole AI era. That fundamental truth didn't change one bit, even on a really bad day. Okay, so you see the volatility, but you also see the opportunity. The question is, how does a US investor even get a piece of this action? Let's start with the most common, the most foundational way to get in. For most folks, the easiest on-ramp is an ETF, an exchange-traded fund. And when it comes to South Korea, the big kahuna is EWY. Think of it like a basket holding a bunch of different South Korean stocks, all bundled up under one ticker you can buy. Now, here's where it gets really interesting. You might think ETF, oh, that's diversified, right? Well, take a look. This thing is heavily concentrated. Almost half of the entire fund is just two companies, Samsung and SK Hynix. So let's be clear, when you're buying EWY, you are making a massive bet on the AI chip market. And this brings up a really important idea known as the Korean discount. It basically means that even though these companies are absolute tech giants, they trade for cheaper, a lot cheaper than similar companies here in the US. Why? Well, historically, it's come down to worries about corporate governance, how the companies are run. It's something the government's actually trying to fix, but that discount is still there. All right, so that was the standard approach. Now let's shift gears and talk about a much more aggressive play. This is for folks who have a higher tolerance for risk and are looking for a much bigger potential payoff. Okay, say hello to KORU. This is what's called a leveraged ETF. It's basically a high-octane trading tool. Its entire job is to take the daily move of the Korean market and multiply it by 3. This is not for the faint of heart. It's for traders who have a really strong feeling about where the market is going today. So when it works, it really works. Let's say the main Korean index has a good day. It's up 5%. Koru is built to give you a whopping 15% return. That's the power of leverage. But, and this is a huge but, that leverage cuts both ways. It's a total double-edged sword. If the index has a bad day and drops 7%, you're looking at a painful 21% loss in KRU. It can wipe you out fast. And I cannot stress this enough, this is absolutely not a buy and hold investment. You don't put this in your retirement account and forget about it because it resets its leverage every single day. It's purely a short-term tool for tactical trades. Get in, get out. So we've talked ETFs, both standard and supercharged. But what's next? Well, there's something potentially huge on the horizon that could completely change the game for US investors wanting to buy into these companies directly. As it stands today, if you're just a regular investor in the US and you think, hey, I want to buy some SK Hynix stock, well, good luck. It's a real pain. You can't just hop on your brokerage app and buy it on the NYSE or NASDAQ like you would with Apple or Google. But that could all be about to change. The company is seriously looking at listing what's called an American Depository Receipt, or an ADR. Now, what that means in plain English is that its stock would trade directly on a US exchange, and that would be a game changer. It would suddenly open the floodgates to all this US money from ETFs and big funds. It could help close that Korean discount we talked about, and it would give them a ton of cash to build out their massive new factories. And listen, this isn't just some rumor floating around on the internet. The company has officially said they're reviewing the plan. So everyone is marking their calendars for March 27th. That's their next big shareholder meeting, and it's when we expect to hear more. So that brings us full circle, right back to that crazy sell-off.
And it leaves every single person watching this space with one big question. Was that brutal Black Tuesday a massive red flag, a warning of more trouble ahead, or was it the starting gun for the next huge buying opportunity?